Whenever the word debt comes up, it is automatically considered a horrible, must-be thrown out of the window kind of word. It is considered to be a complete no-go zone. However, in recent years, the word debt has developed something of a bad name, but the truth is that not all debt is bad. In fact, the good news is that the right kind of debt can even be beneficial for you. Additionally, consider good debt powerful assets that can help you forge passive income streams along with real wealth. To be honest, if no one were in debt, barely any people would secure wealth, or even enough funds to forge an empire. Above all, it would not be easy to buy a home. Yes, debt is that important. If you like this video, do not forget to give it a thumbs up. And if you're new to the channel, you can click the subscribe button. In this video, we will look at 5 steps that can help you generate profits with debt without endangering your financial future. 1. Trade along with debt. The art of selling will take you a long way. If you wish to sell a product in the United States from any other part of the world, you either would pay the factory or borrow products. In this way, you inform the factory that you are aware of how to produce it. Therefore, if you can sell anything above a specific agreed price, then it's going to be counted as a profit. This is your best strategy, as you're not tying up your own money in this transaction. Another way to enjoy this trade with debt is to use leveraged exchange-traded funds, ETFs. ETFs allow investors and traders to enhance their returns by going long or short on a particular index. One can even finance corporations, namely ProShares, which provides affordable ETFs. These ETFs enable investors to expand on their returns and their losses around 200% to 400%. These particular routes will aid you to spend in specific domains, from bonds to indexes. Due to their impressive potential profit, leveraged ETFs are incredibly trendy. Plus, when the market blooms, utilize leveraged ETFs to score fantastic returns that rival investors' desire. 2. Borrowing via real estate debts. Another way to utilize debt is to take the renting route. You're going to borrow in order to invest. And what will you be borrowing? Property, shares, real estate. Even gearing is a good medium to garner immense wealth. Plus, as time goes on, these mediums will enable you to buy even more powerful investments that otherwise deem impossible. Furthermore, say over time, if you expand investments in value, then gearing can yield an increased return, especially once any other debt-related factors, costs, and interests have been considered. The fact is that this money could be more wisely kept in an offset account linked to your mortgage. Even if you do not lock up funds, you will gain a massive after-tax return, including but not limited to the reduced term of your property loan. Moreover, you can even utilize income gathered from assets along with capital growth to pay back the debt. And not just debt, but interest and fees as well. The interest charged on the debt may also be tax deductible. However, never forget that there's always a potential risk that your investments may go down in value, resulting in owing more on loan than the value of your investment. If you find yourself unable to pay back the loan due to circumstances beyond your control, such as an interest rate increasing or finding yourself out of work for an extended period, then the lender might use their right to take possession of you. If we're talking about a worst-case scenario, then relying on the amount you've obtained to invest, you could find yourself losing way more than your original capital. 3. Hedge funds. Made for the rich people to turn them even richer, it's a swift upgrade. Firstly, what exactly are hedge funds? Well, consider it just a wishy-washy fancy name for an investment partnership. Nothing alien about it. Leverage and hedge funds are a party, some of the biggest you may see in the market. Plus, this very infamous investment partnership is known to have a free option to invest as much as they like and invest in excessive higher financial stocks, unlike any other mutual funds. Consider it to forge a bond between a professional fund manager and a keen investor, also known as limited partners. Their partnership will result in a massive pool of money. Well, because they're going to find it together. With that being said, how does one use the hedge fund to help make money with debt? Consider a scenario. You expect a particular stock to decline like Facebook or Instagram, courtesy to Apple, who's well known for producing the most popular smartphone. Let's say it has announced that from next week they will no longer let apps to track you like Facebook or Instagram track your online activity and make privacy their first priority. Considering this will significantly damage both Facebook and Instagram's business model. So what do? You pick up your phone and call your broker to borrow from him a single Facebook stock that costs, for instance, $100. So you get and swiftly sell it in the open market for $100. In this way, now you have $100. However, this is not the end, for you still owe your broker one Facebook stock. So now what do? Well, for one thing, when the Facebook stock does drop next week to say $60, you invest your $100 to buy it. You return it to your broker and pocket the difference. Now you've easily made a 40 out of an entire stock. If the changes work in your favor, you can easily make a fortune using this strategy. 4. Forex. The foreign exchange market is a place where currencies are traded. Currencies are crucial as they enable traders to purchase, sell, and exchange goods locally or to other countries. Business and international trade flourishes due to this forex. Consider trading with Italy, and you're in the USA. You need some product from Italy. You and your company would have to pay the Italians for the product in euros, EUR. The same goes for traveling. A Canadian tourist in Egypt can't pay euros to see the pyramids because it's not the locally accepted currency. It will be the same scenario as the first one. This aside, in the forex market, currencies fluctuate. For instance, the Fed raises interest rates that will limit the supply of dollars in the market and make our dollars stronger against other currencies, or vice versa. If you notice the pattern of the fluctuation, then you can easily predict which currency will rise or fall. By observing this, you can make a lot of money in this market. However, there's going to be a difference between these markets. They're unlike usual markets. How? For every dollar you use to trade in Forex, you can borrow an additional $100. All this means that if you utilize $1,000 while trading, then you can hold a position worth $100,000, even if you end up making a small profit of about 1%. 5. Credit score. Good credit saves money. Bad credit costs money. The best way to go about your credit is to consider it an essential tool. Everyone, and we mean everyone, from landlords to employers, will go through your credit history to decide whether or not you make a good employee. If you're lucky to keep authentic and pristine credit history, you'll be able to enjoy tons of benefits, like reduced interest rates when getting a loan or other situations. Plus, you can put yourself in a beneficial situation, as good credit will enable you to expand your savings and wealth. As for a bad credit report that compromises defaults, late payments, or other negligences that may cause you to buy increased loan rates with high interest rates, you might even be declined. Remember, it is crucial to keep an eye out for the payment history of your credit score. You can start by checking your credit report before taking any other step. The best advice we can give you is to view your credit report every year to make sure every detail is authentic and definitely not missing. If you find any error in your credit report, a simple email to the Fair Credit Reporting Act will alert the credit reporting companies to correct any missing or incorrect information. The most significant part about garnering wealth is being wise and authentic about your debt information and credit choices. Know your bottom line along with your net worth. You cannot forget it when taking vital steps concerning your credit. Was this video able to convince you that debt isn't scary? Plus, when used right, it can generate and turn a loss into a handsome profit. And now, if you like this video, do not forget to give it a thumbs up. Share it with somebody who you think might be interested. And if you're new to the channel, make sure to click subscribe and the bell button for notifications. Thanks for watching. Until next time.